Welcome back, and well, Ethereum erases all of the gains from the Shanghai upgrades rally as Bitcoin and other cryptocurrencies start to come down in price. Now, we saw this happening over the last week or so. The market had a little bit of a rally towards the beginning of April, and now we're at the end of April, and the market has been coming down quite a bit, with Ethereum retracing to levels before the Shanghai upgrade, which enabled withdrawals. So we're going to be discussing this today. We're also going to be discussing Cardano restaking and a catastrophe potentially in the works for the 7th largest crypto by market capitalization. We're also going to be talking about Internet Computer liquefying their Bitcoin. We have AI and altcoins, Celsius, MicroStrategy regulations, Polygon or Ethereum, and much, much more. We have a lot to discuss in today's video. This is the Cryptoviser podcast. I upload every single day of the year since 2018 to bring all of you the latest happening in the financial world and hopefully allow you guys to understand my investment strategy so that you guys can make good investment decisions and create your own investment strategy and build your wealth and secure your future. As always, nothing I say on this channel is financial advice. If you want to do me a favor and give the video a thumbs up, it helps let me know you guys enjoy this kind of content. Don't forget to hit subscribe. That way you never miss a new video. I upload every single day of the year. And if you want to help support the channel, $1.99 a month, click the join button down below to learn more about becoming a channel member. But we're going to be starting right here with the Ethereum price. Now, I have stated over and over and over, and I can't make it any clearer for those out there that want to argue about the pricing. I don't know where the prices are going. I can't predict the future, as none of you can either. What I do is I'm a macro analyst, right? I look at the overall environment of the financial markets around the world, what's happening from a geopolitical standpoint, what's happening in the crypto markets, the stock markets, the debt markets, et cetera. And I try to put all of that information together into a thesis about where the crypto markets are going and where some of the stock market assets that we talk about are going, right? And what I said before the Shanghai upgrade is that I believe that what we were going to see with this upgrade is an immense, kind of push. This happens every freaking time, guys. This happened with the merge as well back in September of 2022 when Ethereum moved to proof of stake. Essentially, these are non-events, right? These are not major crazy events in the Ethereum ecosystem. So what happens is there's a lot of speculation up to and leading into these events typically, and you see the price typically going much higher. But then shortly thereafter, especially with this Shanghai upgrade, which enabled withdrawals from the deposit contract and the staking mechanism, we saw a lot of withdrawals. The withdrawals are still going on currently. They're still underway. When I'm recording this video, at the end of April 2023, there is still a 16-day withdrawal queue length, meaning if you withdraw your Ethereum today, you will have to wait at least 16 days until that Ethereum gets withdrawn. Now, we are starting to see a slowdown of initial withdrawals, which was also predicted right here on the channel, because typically what happens when these events go through, you see massive moves, whether it be into staking or out of staking, whatever the upgrade is doing. And then you start to see a little bit of a trickle out. It's the same thing like I've been telling you guys. The only people who were buying Ethereum leading into the Shanghai upgrade were speculators, people who wanted to buy in at, let's say, $1,700, and then as soon as it hit 2,000, boom, they sold. And that's probably what has already gone on. So if we look at the month, right, the Shanghai upgrade went into effect in the middle of April, I think around the 14th. So you can see before the Shanghai upgrade, we were at $1,865 on April 12th, and we have already revisited this number, and we're actually lower today than we were before the Shanghai upgrade. So for all of those people out there that say, but Cryptoviser, you're wrong. You're always wrong about Ethereum price. Yeah, okay. I mean, I don't know what to tell you. Eat it, right? I mean, the price is lower, and I'm not doing this to pat myself on the back. What I'm doing this to show you guys is, listen, we may still go higher after this, right? But there will always be revisits of these prices. In my view, the people who are rushing to get, you got to get the coin right before the Shanghai upgrade. If you don't own Ether, what's going on with you, Cryptoviser? No. Like, there's no, unless you're speculating and trading this crypto, there's no reason to buy directly in front of a major withdrawal event, which we saw taking place on the Ethereum blockchain over the last week or so. And this will continue. There's still millions of Ethereum that is either in withdrawal or has already been withdrawal combined, right? Those two metrics. And that's a lot of Ether. Now, we do still have 18 million Ethereum in the staking mechanism currently. And will it drop below 17 million Ether? Probably at some point. And again, a lot of the withdrawals that we've seen were the rewards. So people are taking some of those profits out of the market, out of the ecosystem, out of the staking mechanism, as this withdrawal, event has already passed us. And I believe that what we are going to continue to see is that selling pressure from those coins, because some of those coins that were withdrawn still have not been sold or still have not been put in the order books to be sold. So they most likely will be in the coming weeks and months, and this is going to put more sell pressure on Ethereum. And this is why I think that we are still going to see more downside in the Ethereum crypto. Now, I could be wrong on this. Nothing I say is financial advice. I'm just telling you guys my opinions and my strategy and thesis for the market. I am waiting for lower prices on Ethereum to buy, probably around the $1,000 range. Will we hit that? Maybe, maybe not. If we don't, then I just readjust my portfolio strategy. There's no rush for me to get into a crypto, especially in this bear market, and especially understanding that we probably won't be into a full-on bull market until at least approaching the middle of 2024. Or at least around this time, April, May of 2024. So that's a little bit over a year away, and I am not rushing in. So we're going to be talking about Cardano staking in just a few minutes here, because what's happening in Cardano staking, it seems to be mirroring what is happening within Ethereum staking. And again, whenever somebody is withdrawing their coins from a staking mechanism, you have to ask the question, why are they withdrawing it? Some people say that they're going to move those coins into DeFi, but the DeFi Llama data that shows actual, how much crypto is in these protocols in DeFi Llama, which shows it's a data like a dashboard like this for DeFi. It does not show that these coins that are coming out of Ethereum or Cardano's staking mechanism are moving into DeFi, right? So where are those coins going? I can only imagine that they're going on the open market to be sold. And now this brings us to MicroStrategy, right? Because MicroStrategy essentially could move the market with how many Bitcoin they own. They have about 140,000 Bitcoin, and that's worth about $4 billion with today's prices. So according to Bernstein, they don't believe that MicroStrategy's Bitcoin holding poses a concentration risk. And so Bernstein said in a research report that whether MicroStrategy sells its Bitcoin to pay down debt is closely tied to how the cryptocurrency performs. The position is not large enough to distort prices, but it does represent a sentiment risk in the down cycle. For instance, if people see that MicroStrategy is selling their coins, they may start running for the door as well. And then you have everybody freaking out at the same time and then panic selling, and then, the price will go down. So MicroStrategy, we know, has about 140,000 Bitcoin. The company has $2.2 billion in debt with repayments due in 2025 and later. It's pledged 15,000 of its Bitcoins, according to Bernstein. They said high Bitcoin prices means a stronger balance sheet, higher stock prices, and easier debt repayment without selling their Bitcoin holdings. They hold around 0.7% of the total Bitcoin in circulation, representing about 20% of the daily average traded volume in the spot market. So although they have a very large quantity of Bitcoin, it's a very small percentage of the overall circulating supply. And at those levels, MicroStrategy does not necessarily pose a risk, even if trading volumes fell during the bear market, which we are in, though it may affect market sentiment. And the potential liquidation of their Bitcoin during bear markets creates an overhang for Bitcoin in a down cycle. Now, listen, personally, I believe that we will see some selling going on during the bull market. Now, I know I said this during the previous bull market, but MicroStrategy didn't sell. They had a longer time horizon. But the fact that their debt is coming due in 2025 means that they need to get that cash flow in 2024 to pay off those debts in 2025. Now, they may be able to do this from stock prices and offering more stock, or even from the returns that they make from their software business. But I would imagine 140, and we've done the math previously on this channel, if they have 140,000 Bitcoin, even if they sell, let's say, 15,000 Bitcoin at $100,000, okay, that's $1.5 billion, and that would cover a little bit under half of all of the debt that they're in, or actually almost all the debt, because that article said 2.2 billion in debt. So 1.5 billion paying down that, and with just 15,000 Bitcoin. So 140,000 Bitcoin minus 15,000 Bitcoin would be 125,000 Bitcoin. And again, at a $100,000 price, I'm just kind of using that 100,000 as kind of a benchmark. That means they would still have $12.5 billion in Bitcoin holdings. Now, whether they'll sell some more of that, convert it, buy and sell for the dips, I don't know. We're going to have to wait and see where that all plays out. And this is based on a $100,000 Bitcoin price. There's a lot of analysts, including myself, that believe that we're going to go higher than 100,000. Well, I believe that we will probably hit 200,000 and probably end somewhere at the peak between $200,000 and $250,000 during this next bull market for Bitcoin. I don't think that the interest and some of the regulations, which we're about to talk about, are going to be set over this next year or so enough that we would see a higher amount over $250,000. That's a 10x from where we are today, which means that would bring Bitcoin to a $5 trillion market cap. Okay, so during the previous cycle, the 2017 cycle, entire crypto market cap was around, like, it touched $1 trillion. This cycle, we touched like $2 trillion, maybe $3 trillion, but that's all of crypto. So is Bitcoin going to be able to reach 5 trillion during this next bull market alone? I don't know. I mean, a 10x from here, you would think that a 10x during these bull runs is easy to do, especially with all the inflation that we're seeing and the fact that we know there's going to be more money printing going on in the next, couple of years. It's possible that we go even higher than that, right? But I would anticipate that whatever the price predictions that we see, like $100,000 in laser eyes during the 2020 and 2021 bull market, that we didn't hit that. So whatever the market believes that we're going to hit, I think it's going to be much lower than that. And so we're going to start to see $400,000, $500,000, $600,000 Bitcoin price predictions for this next cycle, but I don't think that we're going to go that high. We may, but I would count on like 200 to 250,000. I would say that is a fairly easy goal, right? Under 10x for Bitcoin to do. And we'll see what happens with that. Now, we've been hearing a lot about this FedNow, the Federal Reserve's, central bank digital currency, or they call it instant payment system. And Dante Disparte, who is the chief strategy officer and head of global policy at Circle, the issuer of the USDC stablecoin, he said, "My PSA, public service announcement on the FedNow system and the case for a payment system innovation in the US, the broadest form of payment system optionality, is the key." And so Paul Barron Network posted this video from his congressional testimony. We're going to play it and listen to it, where he says to be banked is expensive in this country, the US. And we exact the highest fees from the people, or I think it's extract the highest fees from people who can afford it the least for very basic services. So if you think about it, right? Poor people are the ones, or I should say the less fortunate, less wealthy. These people are affected the most by, banking fees, right? These people, if they can't even get banked because they need the minimum deposit in their account, otherwise they get charged $20 a month or whatever the fee is, then they go to a check cashing place to get checks cashed or create a check or pay bills, and then they're paying 10% there, right? So what we have seen and what we criticize going on in other countries and other continents like Africa, South America, with these high payment fees and high banking fees for the unbanked, this is happening in the United States at a very, very, I would say, expanding pace. Now, obviously, there's a lot of options for people who don't have that much money, such as Cash App, Venmo, and stuff like that allow the user to not have fees, to not have ATM fees, to not have withdrawal fees, to not have, minimum balance fees and all of this. But let's listen to what Dante said, because I do think that he is getting the ear of a lot of lawmakers. He is a very smart and well-spoken guy. And I think that, what USDC can do for these people in the United States, because it's doing it around the world. We know MoneyGram, Stellar Blockchain, USDC are starting to liquefy some of these countries and allow these people who didn't have traditional banking services to get somewhat banked. Let's listen into what Dante says.
If FedNow is going to work, FedNow has to be provisioned to non-bank actors. The banks, I hate to say it, have no incentive in competing past fee interest incomes. right? To be banked is expensive in this country. To use basic payment services is expensive in this country. And we exact the highest fees from the people who could afford it the least for very basic services. Those services, I might add, also enjoy a public backstop. The last time we socialized, losses to trillions of dollars was in bailing out the very banking system. We just saw 3 of them bailed out recently.
Now I'm going to pause right here because I think what he's saying is super important, right? The banks are not going to innovate to make this FedNow system easy to use for the everyday person. They're going to make it as complicated as possible, right? And remember, these banks, JP Morgan, Bank of America, Wells Fargo, even the community banks, these are for-profit institutions. And we are bailing out the banks when the banks like JP Morgan, they made before the pandemic, I don't know their post-pandemic results, but before the pandemic, and I think even in 2020, JP Morgan made around $40 billion a year in profit. Okay, $40 billion a year in profit. And this was after all of their expenses. And what do they do with the money? They continue to charge people 40% interest rates on their credit cards, continue to charge fees for withdrawing their own money from the ATMs, right? These are very small fees, and they're charging $3. It costs 25 cents to withdraw your money from an ATM in reality. So you're paying the ATM fee, then you're paying the bank ATM fee. So you're paying $5, $10 just to get your own money out of the bank, right? And that's on top of overdraft fees, minimum balance fees, all of that stuff. So we bailed out these institutions that are already making profits off of the unbanked or the underbanked, and we have to go and bail them out, right? So does that make sense? I don't think it does. And I think what he's saying is FedNow has to be able to kind of, it has to be tailored not just for the banks, but for everybody. Let's continue listening in.
And so payments competition is critical. Legitimizing it at the federal level would merely level the playing field between the United States and other countries.
Okay, so his point there, and remember, this is the guy.
So we're not going to watch the Paul Barron explanation, but you guys kind of get it. I think this is really important because we are seeing that Congress and lawmakers around the country and really around the world are looking at cryptocurrency right now and stable coins and payment systems and banking system and seeing how this can all play into what they decide to do as we move forward. And this brings us to, Gemini and Coinbase leaving the United States. They're not even trying anymore, right? They're going to continue to operate in the United States in some form or fashion, it seems. Similar to how we're seeing a lot of different crypto organizations moving from like Binance to Binance US, FTX to FTX US, Coinbase to Coinbase US, and now Gemini to Gemini US. And how does this affect the American public? Well, Americans will still say, oh, well, we have access to these products, but do you really have full access to these products? You don't have access to the derivative market. So the derivative market is the trading market, and it's really a speculation market. It's a way to make money. It's a way to move the markets, and now you're moving all of this overseas. And I think that what we are going to see over the next year or two, whether we see laws getting passed, whether we see crypto bills for Congress going through, I don't know. I mean, this may take many more years, so I don't really focus too much. I mean, on this channel, we talk about it a lot because this is what is going on in the crypto world, right? Gemini's leaving the US, Coinbase is leaving the US. Coinbase chief says that crypto firms will develop offshore without clear US rules, right? What happens if Ripple does not win the XRP lawsuit with the SEC? What happens if XRP is considered a security by the court? And then the SEC starts going after other crypto firms. And all of these crypto firms, do you think they're just going to stay in the United States? I would highly doubt it. Like, I don't even know why Ripple is still in the United States, to be honest, because it's just overburdensome, and obviously they're willing to fight the fight, but is it really worth it when there's other areas of the world that are going to welcome cryptocurrency, are going to welcome these organizations to come in and build the jobs, build the technology, and have, obviously still rules of the road and guardrails in place to protect investors, but not in the way that the US is doing it, when the SEC chief can't even state in front of Congress whether Ethereum is or is not a security. It's really, really ridiculous at this point. And so I think that the first thing we're going to see is stable coin bills and laws passed because they need to protect the dollar. They need to protect the integrity of that stable coin. And then I think that we'll see throughout the years either some type of crypto rules or regulations come into place, or maybe nothing. Maybe they're just going to leave it to the states to do, which is currently what is the path forward, right? And I think that what we're seeing with the SEC not answering whether Ethereum is a security or not, what they're not really suing other crypto firms to the likes of Ripple. I think that they're just trying to cause this, distractions, like focus on Gary, don't focus on, where, investing in crypto, right? Most people are focused on, oh my God, is XRP a security or not? Should I not buy XRP? Should I buy more? It's like, do what you want to do. You know what I mean? Like focus on, I'm not focused on XRP, and I don't really talk about XRP on this channel that much because not really anything's going on. Obviously, there's some technology that they're doing overseas that we do report on. But XRP as a crypto has barely moved since they've been sued. So like we can focus on XRP, which is basically hasn't moved even in the bull market, or we can focus on our investment thesis, right? Same thing like in November, we could have focused on Sam Bankman and FTX, or we could have been buying the market. And what were we doing on this channel? We were buying the market because that was the macro bottom. Could we go lower than that? Sure. Do I think that we are going to? Well, so far we haven't, and we're already 6 months past that collapse almost, right? So that's the way that I view these markets, right? Focus on the big picture, focus on your investment thesis, and don't let anything distract you from it. And this, as we are continuing to see more building and more buyouts being made for the Celsius, Voyager, and all of the other collapses that we've seen. So Michael Arrington from Arrington Capital, he's also a big XRP fan, founder of TechCrunch and Crunchbase. He wrote on Twitter, Project Fahrenheit has been just announced that they're going to become a qualified bidder in the Celsius bankruptcy process. They're using the working name of Project Fahrenheit, which is Fahrenheit Holdings, which is I guess a company that they created to make the bidding process. And so a short thread on what we're trying to accomplish. He said a court filing making their bid public is at this address, and Celsius tweeted it out. And Celsius official committee wrote Fahrenheit, whose equity is owned directly or indirectly by Arrington Capital and U.S. Data Mining Group, and the Blockchain Recovery Investment. These are the two qualified bidders that will participate in the auction. Now, he said, what has happened to the stakeholders of Celsius is an absolute tragedy and has affected the entire industry. We want to help put the pieces back together, and we'll work tirelessly to do that. Arrington said that their bid is not structured as a simple asset purchase. They're proposing that the assets be placed into a new company and is run with the sole goal of growing those assets to make stakeholders whole. The new company will own substantial Bitcoin mining assets, retail and institutional loans, and a variety of crypto core assets and a venture capital portfolio. They've assembled a group of proven crypto operators to run the business, including US Bitcoin Corp for Bitcoin mining, themselves, and NGES, a proof group, to run the venture portfolio. A large loan servicer with appropriate licensing to service customers in 50 states, and a team of experts in quantitative trading strategies and risk management in traditional finance and crypto. Now, this is great and all, but there is obviously still risk, okay? The reason Celsius went down was because they were playing with customer funds. And what Project Fahrenheit, it appears, is proposing is that they're going to take over the assets, and then they're going to essentially trade the assets and make the assets grow through hopefully this next bull market, and then they can make customers completely whole from Celsius with those proceeds. Now, obviously, you have to understand there's profit motive here, and whenever there's profit motive, you have to also understand that there's a lot more risk. This is not like Binance buying Celsius and making the customers whole, or what FTX wanted to do. Obviously, there's profit motive in those as well, but those are also strategic moves to keep confidence in the crypto ecosystem, right? It's the same thing like Gemini, the Winklevoss twins, putting $100 million of their own money up to make their customers whole through the whole Genesis and Gemini Earn situation, right? And so like sometimes you have to give a little bit to get more back and show the customer loyalty. But obviously there is risk here, right? We are going into another bull market, and if they get this bid and they get the assets of the estate for Celsius, that means customers most likely will not get all of their money back right away. and potentially have to go through another cycle where essentially Project Fahrenheit will be doing the trading for them and hopefully getting more money back. But obviously there's a lot of risks. We've seen all the risks play out. I mean, how many crypto exchanges went down with customer funds because they were using their customer funds for trading? A lot, right? And what else did we see during this last bull market? We saw a lot of, irresponsible trading. We saw a lot of like high-level industry experts, like the Bitcoin mining industry. They all overpaid and pre-ordered overly expensive Bitcoin mining rigs in 2021 at the peak of the market, prepaid all of that, and then got those devices, those Bitcoin mining machines delivered during 2022 when the price of Bitcoin went down, the price of the mining machines went down. A lot of these companies were going bankrupt and the energy prices were going up. So how many Bitcoin mining companies went bankrupt during the bear market? And you're like, wait, these are publicly traded companies. They know how the Bitcoin, or you would assume that a Bitcoin mining company understands how a Bitcoin cycle works. And meanwhile, almost every Bitcoin mining company was selling their Bitcoin during the bear market in 2022, not during the bull market. So there is obviously risk here. I do think it's interesting that Arrington and his companies created Fahrenheit Holdings to make a bid for the Celsius assets, and we'll have to wait and see kind of where that all plays out. And this leads us to Cardano Foundation is revamping its delegation strategy. Don't forget to give the video a thumbs up. I upload every single day of the year. If you want to help support the channel, click that join button down below or link in the description to learn more about becoming a channel member. For as little as $1.99 a month. And you can also hit subscribe. That's free to do. And I upload every single day since 2018. Give the video a thumbs up and let's get to it. So we know the Cardano entities, which is Cardano Foundation, Emergo, and IO Global. These are the three founding entities of Cardano. Now, Cardano Foundation and IO Global, they have Emergo as well, or at least Emergo did have a large quantity of Bitcoin that they were given from the Genesis block of the Cardano blockchain. And essentially, they are supposed to use these coins, generally speaking, to help grow the blockchain, protect the blockchain, and develop it. But what we saw during the staking stage when staking went live on Cardano is we saw the community asking the entities to utilize their Cardano coins to help smaller pools build out their business, right? Build out their staking ecosystem. And so then we saw the Cardano Foundation and IO Global started to delegate some of their holdings to community pools to help them build up. Now, Cardano Foundation has recently redelegated, and let's understand a little bit more. And then I'm going to give you guys some insight into what's going on in the Cardano blockchain. And are we approaching catastrophe when it comes to Cardano staking? And I'm going to explain more in just a few seconds here. But the Cardano Foundation has just wrapped up its redelegating process, which significantly shifted its delegation strategy or staking strategy. The updated approach emphasized stake pool contributions to the community, promoting the creation of open source solutions and offering support for the broader ecosystem. The new initiative is designed to nurture the growth of the ecosystem by recognizing the exceptional efforts of stake pool operators and encouraging their participation. As per the Cardano Foundation's post, on April 21, more than 250 stake pools applied for redelegation of the Cardano wallets. Nevertheless, out of these, just 45 pools were chosen, quote, randomly and granted delegation. I would love to know what randomly actually means. But anyway, I'm not a stake pool operator, so I don't really care that much. But anyway, so based on the data from staking rewards, the current staking ratio for Cardano stood at around 65%. Now, this is where I am going to pause for a second, but let's kind of move on and we're going to come back to this because the 65% number is super important and it's also really worrisome. Now, Santiment data revealed that there is a sudden surge in the number of active addresses on the ADA network. According to a 7-day active address metric, ADA was exhibiting a steady rise in active addresses. And there were approximately 371,000 active Cardano addresses, a figure not seen since February of this year. So, as I've explained before, Cardano price during the bear market, at least during the last bear market in 2018 and 2019, barely moved, right? We had a little bit of volatility up and down, But even if you look at this bear market, Cardano went from 24 cents at the low, which happened around the FTX collapse, to about 50 cents, but that's about it. It's in this really, really tight range where we're seeing other cryptos like Polygon go from 70 cents to $1.40, then back down to $1, then back down up to $1.20. So we're seeing these 20 and 30, 40% swings in certain cryptos like Polygon, like Solana, but we're not really seeing that much movement in Cardano, but Cardano maintains a very high, a high ranking. If you remove the stable coins, USDC and Tether, it's number 5 crypto in the world by market cap. Now we have to remember, there's still more coins, there's still more ADA that is continuing to be injected into the circulating supply, and the circulating supply is what determines the market cap. So when they are increasing the circulating supply and the market cap should not be increasing, that's where the price will come down, and you'll see some price pressure there, not due to selling. But this other metric, the live stake at 65%, and you could see this on the C Explorer, the CardanoExplorer.io website. And right here, this is the live stake. And this shows about 23.3 billion ADA in the staking mechanism. And the active stake is 24 billion ADA. This is down 4.2%. I'm guessing in the week. But anyway, this is concerning because now this stake ADA is only 65% of the entire circulating supply of 35 billion ADA. Okay, so this circulating supply of almost 36 billion ADA is about 80% of the overall supply. The maximum supply of ADA is 45 billion. And the rest of those coins are going to be for staking rewards and the treasury and stuff like that. And it's going to be released throughout the course of time. And that's what I'm saying. When that maximum supply is being injected into the circulating supply, this can cause pressure on the market cap and the price of ADA. But this 65%, I've been talking about this for quite a while. During the bull market, this number of staked ADA was in the 69 to 74% range for pretty much the entire time. We have to understand every 1% removed or added to the live stake means that we're moving around 350 million ADA. Okay, so any 1 percentage point to the upside or downside, if we go to 65 to 64, that means 350 million ADA were removed from the staking mechanism. If we see this number go from 65 to 66%, that means 350 million ADA were added to the stake supply. So again, if we are thinking about where we were at the end of 2022 or even early 2023, we would say we were at about 71%. Okay, so 71 minus 65%, that's a 6% difference. So 6 times 357 million ADA, that's the exact number based on the circulating supply. Circulating supply is 35.7 billion. So 1% of that is 357 million. That means over 2 billion ADA have been removed from staking in the last 6 months or so. I don't know the exact time frame because I'm not tracking it that closely, but I'm saying generally speaking. If you look at some of my older videos where we're talking about Cardano staking, you'll be able to see this metric on those videos. So if you want to really know the exact number, go look at some of my other videos. Just type in the Cryptoviser Cardano staking or something like that on YouTube, and you should be able to see those videos. So 2.14 billion ADA have been removed from staking in the last 6 or so months. Okay, now if we do this at current prices around 38 cents, so we'll multiply this by, let's just say 35 cents, right? Because the price has been lower, higher, whatever. We'll just say 35 cents. That means that almost $750 million has been removed from the staking mechanism. Now, granted, not all of it probably has been sold or is being removed from staking to be sold. Some may go into the DeFi, but like I said, if you go to DeFi Llama, the data over there does not show that the number of ADA is significantly increasing. There's only, I think, maybe 100 or 200 million ADA in the DeFi protocols. So where's the rest of these coins, these $750 million worth of coins? It's 2 billion ADA. In my view, those coins have been sold or are on the market to be sold or are being used for trading. That's what I think is going on here. I could be wrong, but I have still to this day, every time I say this, there's people in the comments, but Cryptovisor, nobody's selling their ADA. Okay, then where is the coin going that's getting unstaked? That I don't understand. Any coins that are getting unstaked, and granted, as we go through time, the percentage of staked ADA is going to decrease. In 5 or 10 years, there's probably going to be a 40% of the ADA that's staked, right? Because as time goes on, coins go away, coins just go into cold storage. People don't want to deal with the staking mechanism, moving from pool to pool. And large institutions, they may not get into it either, especially with everything that's going on with the staking ecosystem. Now, I have been reading, somebody wrote in the comments the other day that Binance just disabled staking in Europe or the UK. I was not aware of that. I don't even know. I mean, we could probably type in Binance to see their pools here. So Binance still has staking pools, but there's definitely not as many pools, it looks like. Well, I don't know how many of these are actually the Binance pools, but you can see Binance staking 71, that's their 71st pool, has no ADA in it. No ADA. So why do they have these pools with no ADA? Were they selling the ADA? And you have to understand, the people who are saying, but Cryptovisor, nobody's selling their ADA. It's these people don't know, they have maybe $5,000 in ADA, right? And maybe they'll have a little bit more, but these people are all in ADA. So they're not they're not analyzing these markets neutrally, right? They're looking at it from I hold ADA, so we can't have a catastrophe in the Cardano ecosystem, right? But at the end of the day, right, these big money, which is Binance, Coinbase, right, these large institutions that are holding large quantities of ADA, there may be reshuffling of their own portfolios, right? Maybe on Binance, they're seeing a lot of their customers selling their ADA. And so if their customers are selling their ADA and they're selling it to non-Binance customers or users around the world, then the Binance pools are going to be drained, right? And the other thing to keep in mind is that before FTX, people were, I'm going to say, quote unquote, involved in Cardano or buying Cardano or speculating on Cardano through FTX's perpetual swaps. They never listed Cardano, but they were manipulating the price of Cardano through these perpetual swaps, which we're talking about Gemini and Coinbase creating these derivative platforms overseas to enable perpetual swaps. And perpetual swaps is just derivatives of the underlying asset, but not actually touching necessarily the underlying asset. So FTX, they had perpetual swaps, so you could bet on Cardano price movement without actually holding the ADA. Now, there's very few perpetual swap platforms that are only trading the perpetual swaps and not the actual asset itself. So we may be seeing some actual withdrawing from the Cardano staking mechanism or buying of Cardano for the purpose of trading and speculating. Okay, because before, like I said, you were able to speculate on Cardano price without holding the actual ADA. But now that FTX derivative platform is gone, and essentially there's no global trusted perpetual swap platform, you have to hold the actual underlying asset to trade it and speculate on it. So that may be part of the reason. But again, when I see this number coming down, it tells me that there's other things going on behind the scenes. I don't know what, that we are seeing a lot of ADA getting unstaked, and I don't know why, right? I'm just trying to figure it out. Maybe it's because Binance customers are offloading their ADA. That could definitely be possible. Maybe some of these exchanges like Celsius and Voyager, if they allowed ADA trading, maybe they're selling some of those ADA, because we know some of these bankrupt exchanges, they've been selling their coins. Maybe Genesis was selling some of their coins, right? And so that can also put pressure on the market. And that's why I was saying these just everyday holders who are Cardano maximalists, they don't want to see it, but there could definitely be trading going on. And that's why we're seeing Cardano not moving as much as some of the other coins in this bear market, right? So I wouldn't say necessarily it's a catastrophe, but also from my perspective, somebody who does want to hold Cardano again in the future, I don't hold any Cardano at this point in time. The lower this number goes, the better the entry point. That's my opinion on it. Because If my theory is correct that we're seeing a decrease in staking because Cardano is being sold or traded, obviously there has to be somebody on the other side of that trade, so somebody's buying it. But it also tells me that all of the buying and selling of the coin is going on currently and has been going on over the last 6 months or so. And so in 5 more months, if we see this stabilize out or even increase, that means that the selling is over. Cardano blockchain, again, I'm not saying that this number indicates that there's definitely selling going on. That's my opinion. That's my thesis. That's my strategy. But obviously I could be wrong on this. So that's important to understand also, right? My thesis is to like look for a good entry point in Cardano. And I would imagine any of you guys who are investing, you want to find a good entry point in any asset that you're investing in. So personally, I'm watching this metric because this is the only blockchain that has staking that we can really see where most of the ADA is moving and the ADA flow is going. And we could predict the following steps when we're seeing that go on, right? Until I start to see this live stake increasing by 2, 3, 4%, the price is still going, in my view, going to still sideways trade and probably go down. Now, I could be wrong on this, so make sure you guys do your own research and let me know what you guys think down below. Now, another coin that has been moving like crazy has been Internet Computer Protocol, ICP. Now, you guys know at the beginning of 2023, I converted my Cardano coin into 50% Polygon and 50% ICP. Now, since then, I have increased my position in both Internet Computer and Polygon blockchain. Polygon is more of a longer term hold. Obviously, Polygon has had a lot of volatility. I could have definitely sold at $1.30, $1.40, waited for it to come back down where it is now at $1 and then, repurchase it and you can swing trade that. But I'm holding a little bit longer because I don't think that we are at that peak yet. And even if we are already reached the peak for 2023, I still am very bullish long-term about Polygon. And Internet Computer, same situation. If you look at Internet Computer over the last month, right, I purchased ICP in January, okay? It was like in the middle of January. It was around $4, like the mid $4 range, right around here, okay? I don't think, yeah, you guys can see the screen. It was right around here, the $4, $4.50, maybe even $5 range. And then I've been dollar cost averaging a little bit into it since then. So in February, we went to $8.20. And what just happened right here? We had a $7.25 price at, April 20th, 420, right after the Shanghai upgrade, right? And then we've come back down. So there's also been a lot of volatility in Internet Computer Protocol. And as you guys see, we went to the $8 in February, then we came down in March to back to $4, and then we went back up. This same thing is happening with most of the cryptos. We're seeing massive volatility. Internet Computer, Polygon, Ethereum, and this is an opportunity to swing trade back in and out of these coins. Now, obviously it's risky and you have to understand the risks involved and be ready to lose money if you are doing that swing trading. But if we look at Polygon as well, Polygon in January, I converted into Polygon. I think it was around like 90 cents, maybe $1. Anyway, it was between 70, 80, 90 cents. We went up in February to $1.60, so double the price. It came back down to $1 and then went up to, I think, $1.40 at the high after that. And now we're back down to $1. So there is a lot of volatility here as well, but you can see we're back at prices that we were in January. So 4 months of gains or 4 months of movement have been wiped out essentially. So this would have been a good trading coin over the last few months. Where we're going to be, in the coming weeks and months, I don't know. I've been predicting that, the price of cryptos is going to peak out in or around May. I don't think that we're there yet personally. We may already have passed the peak, but I think that we're going to have one more major move to the upside. That's my prediction. I could be wrong, but that's how I'm investing. And so the next major move up, I am definitely going to be offloading some crypto. Probably not my entire portfolio, but probably definitely some more speculative assets so that I'm in the green, sell them off, and then wait for better prices towards the end of the year. Maybe we won't get those, but based on my analysis of the market, I believe that we will see better prices towards the end of the year. And obviously I could be wrong, so make sure you guys do your own research. So now Internet Computer, just this past week, they've issued liquid Bitcoin for faster and cheaper Bitcoin transactions. So the Dfinity Foundation, that is the entity behind the Internet Computer. They issued CK Bitcoin, a liquid and cost-effective twin token that is backed one-to-one with Bitcoin. The development brings layer 2 capabilities to Bitcoin, making it faster and cheaper to transact without compromising security. Layer 2s, we obviously know, are helping with scaling and different things like that. By integrating directly with the Bitcoin network, CK Bitcoin can be used on DeFi applications on supported networks without relying on centralized bridging services, which are a major security concern. The Dfinity Foundation said, Dominic Williams, the founder of Dfinity, said CK Bitcoin means lower transaction fees, speed, and mostly importantly, no bridges. And by the way, if you're up to this point in the video, don't forget to give the video a free thumbs up. It lets me know you guys enjoy the content, and it really does help out, and it's free to do. So give the video a thumbs up. Now, Dominic said, this is a milestone in the Bitcoin journey, and the Dfinity Foundation is excited to see how projects building on the Internet Computer blockchain implement CK Bitcoin and explore novel use cases. Now, I believe that Internet Computer is going to be a big one this next cycle. That's what I am kind of starting to position myself in. It's a very small position on my portfolio, let me be clear, but I am buying Internet Computer. I do plan on trading it this year, potentially, and buying more before the next bull market, because again, where Internet Computer is versus its launch we're basically at the bottom of the bottom. I mean, we bottomed out at around $2.90, basically $3. That was the cycle low right here in January 6th of this year. And that was, it's pretty damn low. I think that's an all-time low for the coin. And so they still have development, they still have use cases, and they still have the ability to incorporate AI, metaverse, and gaming into the platform over this next cycle, which I think is going to be the big topic of this next cycle. And this article explains it perfectly. The power of AI and meme coins, a new revolution in the crypto space. Now, everyone's talking about AI. AI is the hot thing right now. And I believe, if we look back to 2019, we started to see DeFi protocols and oracles popping up, and those assets, the coins for those chains, did extraordinarily well during the bull market of 2020 and 2021. So what I've been trying to do is figure out during this whole bear market last year and this year, where are the what is the next big thing in crypto? Because it's not going to be DeFi, it's not going to be metaverse, although I think metaverse is going to do well. And it's probably not going to be gaming either. There's going to be something new. And then we started to see AI become really big. And this really started over the last few months. And I've been telling you guys, AI, I think this is the thing. I think this is that next big thing. Any crypto during the next bull run that says they're integrating with AI, I think it's going to, whether they're able to do it or not, or whether they actually incorporate AI or not, them just saying it, I think is going to pump these coins that integrate with AI significantly higher. And I believe that Internet Computer is going to be able to do it, because Internet Computer is the technology for that kind of thing, right? Decentralized servers and database, et cetera. So there's a lot going on here. And I'm not going to go through this whole article about meme coins and AI and whatever, but Snailbrook is launching, and Snailbrook is basically what they talk about in this article. Snailbrook's ultimate goal is to become the meme of all memes and build a utopia for meme coin fans and investors. The meme coin was founded by an entrepreneur who envisions it as a symbol of hope, egalitarianism, and boundless potential. He stated, "We launched as a meme coin because we remain set on the fact that these memes are a microcosm and symbol of crypto at this point, as well as the spear to retail. Memes originated as a symbol of inclusivity, happiness, and hope. It quickly turned into a cesspool of scams, pump and dumps, and malicious intent to ruin each other's hard work. We're here to change the tide." So they're launching at a time when AI is catching everyone's attention. The meme coin integrates, look at this. So this is like a Dogecoin for AI. The meme coin integrates AI technology to increase efficiency. The move enables Snailbrook to tap into the fast-growing AI market and harness its transformative power to create future-proof meme coin ecosystem. Now, listen, I'm telling you guys this, not saying like I'm going and buying Snailbrook, or telling you, because I'm not here to give financial advice. I'm not a financial advisor. I'm definitely not your financial advisor, so you have to do your own research. But notice that it's already starting. They're starting with meme coins, right? Dogecoin, everybody, jumping into. Shiba Inu, everybody was jumping into. Floki Inu, everybody was jumping into during the last cycle. And now they're saying, oh, well, we have a meme coin and it's going to be AI meme coin. So what do you think people are going to do? They're going to speculate on it. They're going to buy it. So this is potentially, a trade that you can make if you feel so inclined. But I don't even know if it's not even on Masari yet. But anyway, bottom line here is that it's already starting. We're already seeing the move to these AI coins or AI integrations or AI marketing for these coins. And regardless if they're going to actually do anything with AI or actually implement anything with AI, I think that these are the ones that we have to keep our eye very closely on. And this is why I am in Fetch AI. This is one of the main AI protocols with AI in its name. And it's been around for quite a while. And I think that it's going to be a fairly good performer during the next cycle. Now, I could be wrong on this. So make sure you guys do your own research. My portfolio holding of these AI coins is going to be minimal at best, okay? And so is staking Ethereum or Polygon better investment than AI crypto? Again, another article talking about AI. Now, here's the deal, guys. These AI cryptos are going to be very, very highly speculative. So you have to be really careful with what you're investing in, how you're investing in it, and understand there's going to be a lot of hype and not a lot of, not a lot of delivery of what that hype is. So if a coin like Ethereum community can say, oh, we're going to implement AI, and everyone's going to be so elated by it, but by the end of 3 years later, there's going to be no AI implemented. Okay, that's a potential. So personally, I'm more heavily weighted in Polygon than I'm going to be in AI coins, at least currently. And I would say, like, for the everyday investor, probably Ethereum and Polygon are probably better assets to be invested in than AI, because AI is going to be speculative, meaning the prices are going to move. They're going to swing very high and they're going to swing very low. And there's going to be a point where the music is going to stop. And if you're holding the bag, you lose all your money. But that doesn't mean you can't make money on it, right? You just have to understand where the prices are going to go, have a number in your head that you're going to sell, and then move on to another coin and just forget about that first coin that you got out of, right? Or that you held for speculative investment. It should be a very small portion of your portfolio, because as we've gone over, the math basically dictates that if you put, let's say, okay, $100 in an AI coin, and then you put $1,000 in Ethereum coin, the AI coin may perform better, but you have less risk of losing because you can only lose $100. Where Ethereum may not perform as well as the AI coin, but it's most likely going to retain its value better than the AI coin. So I would personally rather lose $100 than lose $1,000. So if I had $1,000 to invest and I wanted to invest in Ethereum and AI coin, I would probably put $900 in Ethereum or Polygon, or a combination of both, right? $450 in Ethereum, $450 in Polygon. And then that would be $900. And then the remaining $100 I'd put into an AI coin. So if that AI coin goes up 20x, I have $2,000, right? So I doubled my initial investment, and I still have Ethereum and Polygon that I bought. And if those don't perform that well, I would imagine, I would guess many of you would agree with me, that Ethereum is not going anywhere, right? And Polygon is most likely not going anywhere either, at least in the shorter, medium term. But these AI tokens and the hype around the AI coins will probably go away at some point. So that's where you have to kind of decide which is best for your investment thesis and strategy and portfolio. But make sure you guys do your own research. I'm not a financial advisor, and I'm definitely not your financial advisor. I upload every single day on this channel, so do me a favor, give the video a thumbs up. Let me know what you guys think down below in the comments of the video, and I will see all of you right here tomorrow on the Cryptovisor podcast. Invest responsibly, do your own research, and crypto on.